Hey everyone, welcome on a Super Bowl Sunday. I'm sure you must be excited to watch the game. I know I am, and I'm looking forward to an amazing game. I don't want to be that one-sided game where they score like 20 points in the beginning and we are done. No, I want to be that nail-biting game that goes till the end like we had in the playoffs. So this is going to be a very interesting day. And let's do this. Mention in the comments who do you think is going to win the Super Bowl today. Either it's going to be Rams or Bengals, but let's see who do we get more votes for on this channel. Now, I'm excited regardless of who wins. I think SoFi, our favorite stock, is going to be the winner at the end of the day. It's a touchdown day for SoFi in many ways. So let's do this. I'm going to mention an article, or I'm going to go over an article today in today's video. Now, there are many articles that are written. There are many news that comes out of SoFi. Sometimes it's kind of worth reading. Sometimes it's the same thing being repeated again and again. But this article that I read that I'm going to go over today mentioned some amazing and some great points which I'm going to share. Now, it's very easy to say a stock is going to the moon without any fundamentals and without, basically giving any background. Just to the moon, the stock is going to be $100 in 2 years. What is the basis? How are you saying this? Or it could be the stock is going to tank and it's going to $20 or $5 or $10 at the end. It's very easy to kind of make those comments or those future predictions. I don't believe in predictions. I believe in stats and data. So today I'm going to go over an article that is going to talk about the pros, the cons, the good, the bad, and of course, where do we see SoFi in the near-term future? And then I will give you my idea of where do we see SoFi leading up to the earnings and what's going to happen after the earnings. Because remember, SoFi trades in the same market as everything else. So let's go ahead and share this article right here. Yes, you can see. Okay, great. So this article actually covers SoFi from top to bottom at every angle. I really enjoyed reading this article. So kudos to whoever wrote this because they were very level-headed and they gave all the details very clearly. Okay, so right here. So first of all, SoFi, an online personal finance company, provides financial products. That's all well and good. And then SoFi also owns a platform called Galileo that it acquired for $1.2 billion in 2020. We all know how important Galileo is for SoFi. Galileo's digital payment platform enables critical checking and saving account-like functionality via its powerful open APIs. We all know that. So now let's look at SoFi's three major revenue streams include the following. Lending, number one, student and personal loans and home mortgages. Now we know what's going on with student loans. Number two, Galileo, a banking infrastructure SaaS solution, which is really, really important. SaaS, software as a service, is one of the things that can take the company to the next level. Okay, solution that helps other companies build digital banking products, issue credit cards, and process payments. SoFi Money, a super app for all kind of financial advice and transactions for users, including brokerage account to purchase stocks. Now let's talk about the bull case for SoFi. And this is where it's going to get very interesting in just 1 second. Okay, it's growing very fast. We all know that SoFi has been growing really, really well over the past few months. A lot of optionality in cross-selling. This is another good point. That means the cross-selling is amazing on SoFi. And we have seen Anthony Noto mention that cross-selling is one of the key factors for them for their growth. Okay, wide moat, high switching costs, especially for lending and financial services. Young customers wants digital first bank, financial services. We all agree that everybody is moving to digital. Then large total addressable market, $22 trillion according to SoFi. Their TAM or total addressable market is massive, and that's why I'm excited for this company. The risk bear case for SoFi. Number one, interest rate risk. Okay, interest rate risk. As interest rates go higher, fewer loans may originate. But on this point, I'm going to say there is a plus too, because as interest rate goes higher, there are more chances, I would say there are more opportunity for SoFi to make more money from the existing loans and also offer their depositors a better rate of return on their money. So it's not a negative in my opinion. I think it's a positive point as well. And then the second point, SoFi is not profitable and still in growth mode. Now this is a plus in my opinion because we like growth mode companies. We like companies those who are in growth mode because we know that we have more chances to get better return on our investment, especially when a company is in growth mode, because we know that they are going very hard to kind of acquire new customers, to acquire new businesses, and overall get to the profitability. So I think as an investor, as an early investor, this is a great point. Legacy bank digitizing their services. Now this point is a risk for SoFi. but not so much. All the legacy bank, they have these kind of services. They already have these apps, they already have these sending money, receiving money, all those things. But yet they are not very popular, especially among the young crowd, because they understand that the services that SoFi can offer will be a lot more in terms of what the app can do or what the service can do as compared to a legacy bank. Also, legacy banks are very slow. They are like old elephants who would take forever to turn. SoFi is a very agile company. As soon as they see an opportunity, they would turn and they would take advantage of that opportunity. Look, how many banks are in crypto? How many banks are offering the kind of services that SoFi is offering? Even though they have the revenues, they have the customers, and they have the manpower to do that. They're very slow and they're very used to their way of doing business, and they don't really like to turn around and try different things because, again, they're so used to doing their own businesses. So that's why I feel the 3 risk or bear case, only one is, I would say, makes sense here, which is basically the first one, interest rate risk, but at the same time it also has a positive side. So I think overall what the article is talking about, the bull case and the bear case, is all in positive in my opinion. Okay, next, fundamentals. It's very interesting. Listen to this. In the third quarter of 2021, SoFi recorded $270 million in sales with gross margin of 75%. Now, SoFi's revenue has grown 40 to 100% in the last 3 quarters. Very important point. So the majority of the revenue comes from SoFi's lending business, $215 million, and Galileo, $50 million, while the financial services revenue accounted for $12 million in the third quarter of 2021. Now, after the bank charter license, I think the financial services revenue is going to change. We are going to see a new, I would say, approach on the financial services revenue, and the number is going to grow because now they can offer more products, they can offer better rates to their members. So I think this particular point is going to grow. So we know that lending business is going to grow. Not in the short term, but in the long term, lending business is definitely going to grow. Galileo is growing. We know Galileo will continue to grow. More and more banks, more and more businesses are adopting digital payments, and Galileo is going to grow. And financial services, which they just received the bank charter, is going to grow like crazy in the next few quarters. This is really interesting what they're saying here. Okay, SoFi has also been successfully in growing in business at substantial rate, even with the US government's student loan payments during the last year due to COVID. So we know that US government's moratorium on student loan payments have kind of dampered SoFi's growth, but they are doing very well. Still, without the student loan, they are doing very well. But we know that student loan is really important for SoFi. At the same time, the number of SoFi members has achieved a greater than 100% growth rate for the last 3 quarters and continue to accelerate. This is good point. Now let's take a look at SoFi's trade book value, and this is interesting. This is where I feel the article or person who has written this article has been very, very level-headed, but again, I'll give you my opinion. So SoFi trades at a book value of $5.3 that could be floor for the stock. However, JP Morgan and other big banks trade about 1.5 times the book value, and hence a realistic floor value for SoFi could be 5.3 times 1.5 or $8. However, SoFi also has Galileo business segment that should be valued as a SaaS company, and I told you SaaS company is the best way of making money for any tech company. And we know that SoFi is a bank, but a fintech. It has a huge tech presence. So SaaS company is really exciting, and a SoFi money segment as well. With a revenue of $200 million a year that is growing to 80 to 100% and a margin greater than 80%, a price to sales ratio of 10 is a decent multiple, and hence Galileo should alone be worth $2 billion. Hence, I believe the floor for SoFi should be $10 to $11 with a lot of upside. This is where I think the article or whoever wrote this article is making complete sense here. I think the floor for the SoFi stock, when we go, let's say, market crashes or something really bad happens in the market, because imagine, or I would say not imagine, but don't forget that SoFi still trades in the same stock market like anything else. So it cannot sustain the beating the stock market is giving to all the value, all the growth companies. Now even value is included in that. Look what happened to Apple, look what happened to Google, look what happened to Amazon. Google, after announcing the 20-to-1 split, still went down. This is crazy. Just a few months back, I'm going to remind you, Nvidia, check it out. When they announced the split, Nvidia never looked back. It just continued to go up. But look, Google, being 20-to-1 split, still went down. So that tells you that market is really ruthless right now. So what I'm seeing here is that it's giving you a direction. It's giving you a price point that at $10 to $11, if SoFi hits, that's the time to load up. If it hits that level, I'm not saying it's going to, but if it hits, that's the bottom floor price of stock like SoFi with a lot of upside. Okay, now take a look here, Catalyst. SoFi has recently received approval of National Bank Charter, which provides SoFi with better access to cheaper rates. We know that bank charter was really key and very important for SoFi to grow their financial side of business. So that's going to always help SoFi in the coming quarters and in the coming years. Next, SoFi said the charter also enhances its financial product and services to ensure they efficiently meet the needs of the members. Of course, we know that. This year's Super Bowl location at SoFi Stadium in LA is another potential catalyst that could further enhance the company's exposure and customer acquisition strategy. We know that SoFi has been really trumping on SoFi Stadium and the Super Bowl being there, and today's the day, and we are going to see a lot of SoFi banners everywhere on the TV when we are watching the game. It'll be really interesting to see what kind of traction they gain. I am tracking actually their web traffic, and of course with SoFi, we are going to see some amazing web traffic today and also leading up to today. But I'm going to actually seeing how many people are hitting the login page, because that what tells you that how many members are getting, and I will have that data for you. Additionally, the federal government will end the student loan payment relief this year, which could benefit SoFi's student loan business segment. This is, of course, a good sign. On May 31st, we know that government is supposed to end their student loan moratorium, but let's see what Biden does at the end of the May. Okay, technicals. Oh, sentiment actually. Sentiment continues to improve quickly for SoFi with steady positive news flow since January 2022. In between, I have shown that news graph. We had a lot of red in between. I think after the previous earnings, we had that few positive articles, and after that we saw this huge negative trend, and after that we are seeing more and more positive news. Management has also been buying stock in an open market in the last few weeks. Additionally, the sentiment may improve further on Monday morning after masses of people learn about SoFi and SoFi Stadium for the first time. Again, a very good news. All right, so now the technicals and then the summary, which is of course nothing major. They're just talking about how the support is of the SoFi stock. So here's what I feel and I believe. Now, SoFi as a company is a solid company. I have mentioned in many of my previous videos. And in my last video, I compared the earnings and what are some of the risks are. And I saw some comments where people are mentioning that, you know what, you are going to go out paper hands, you're going to sell the SoFi stock. So for all those who have mentioned in the comments below, here's my take. I'm not selling my SoFi stock. I am actually buying more if the SoFi hits that 10 and 11 level. If you are on my Discord, you probably saw a trade that I did just a few weeks ago where I bought 10,000 stock and I basically bought it for the trading purpose and I got out. I still have my 11,000 stock because I bought those 10,000 on margin and I don't like to go on margin. So, but I only bought it for like a day because the stock was just flying. I bought it in the morning and sold it in the evening. I just wanted to trade that one trade for 10,000 stock, but that didn't include my 11,000 that I have. So I do plan on holding my 11,000 SoFi stock for a very long time. I'm not getting out of it. And I have a lot of options which I plan on holding as well. I'm not planning on selling those options. I'm actually going to add more to my current option to bring my average down, because right now my options are losing big time. So for me to make money on those options, my average has to come down. So as we get into the March meeting, as we get into the new CPI data, I'm going to actually buy more so that my average can come down. And then when SoFi rallies and the market rallies, I can get out of those options. That's what I plan on doing. I hope you liked today's video and I hope you enjoyed today's game with your family and friends. It's a wonderful evening, so go ahead and take full opportunity of it, and also talk to your friends about SoFi and tell them how great this company is, because we love their stock. And if you liked the video, then give it a thumbs up and consider subscribing to the channel. And for more one-on-one conversation, join our Discord and Patreon. Links are in the description below. As always, a pleasure to share all of this with you. Until next time, you all have a sparkling day.